Hello everyone, this is Dipesh and you are watching Neeti Money. So today I'm going to discuss how you can invest in mutual funds. So primarily there are two ways to invest in mutual funds. One is lump sum investment and the other is SIP, which is systematic investment plan. When you have a large amount of money and you want to invest all of it into a mutual fund, you need to choose lump sum investment. And if you want to make periodic investments, be it daily or weekly or monthly or quarterly basis, so in those cases you need to choose SIP, right? So if you are a salaried person or even if you are a business person, you might have recurring income every month. So whatever your savings are, or even at the time of the salary hitting your bank account, you can stash away a part of your income, let's say 20 or 30% into SIP. So in this way, you can plan your finances to get your returns accordingly. So let me give you few examples. Let's say you are a salaried person, you are making 50,000 rupees salary, and whenever the salary hits your account, you can invest a part of it, let's say 20%, which is 10,000 rupees into SIP. Now, after spending all the other, like whatever expenses you have during the month, so you see at the end of the month you save another 3,000 rupees or 5,000 rupees. So what will you do with that money? You can either keep it in your emergency funds, or even if you can, like even if it is possible for you, you can invest that extra amount into lump sum investments, right? So this is a way how you can plan your finances. And for businesses, if you are into business, let's say you are making 50,000 rupees of income, and after all the expenditures and all, like monthly expenditures, and also at the end of the month you see you are saving around 20% rupees, which is around 10,000 rupees again. So you can invest that 10,000 rupees into SIP. So for extra income, so for any particular month you see extra income, be it salary or be it business. Let's say for salary you get extra incentives. So in those cases you can put away that incentives into lump sum investments as well. And similarly for business, you can invest that extra like sales money. So let's say for some month you make extra sales and you're making extra income of 10,000 rupees. So you can like put that into lump sum investments as well. So in this way you can plan your finances to get the best returns from your investments. So apart from lump sum investments and SIP, there are other ways how you can invest in mutual funds. One is STP, which is systematic transfer plan, and another is SWP, which is systematic withdrawal plan. So STP is used to transfer funds from one fund to another. Let's say you have purchased one fund, and after a period of time, or even after just after making the investments, you can plan to transfer funds, like selling a part of the purchased fund and buy other mutual funds, right? So I'll give you a detailed examples to better understand this scenario. So let's say you have your retirement funds and you want to invest that fund into mutual funds. How you can plan that? You can initially invest in safer mutual funds, which is like debt mutual fund or equity arbitrage funds, and you can gradually invest a part of it into equity mutual funds, so that for market volatility scenario you do not get to see a lower returns from your investments, right? So like if you have invested into equity mutual funds and after 3 months or 6 months the market goes down, and the market like when the market goes down, the stock prices will also go down and the mutual funds value, which is NFV, will also go down, right? So to avoid this kind of scenario, you can initially invest into debt mutual funds or equity arbitrage funds or like similar funds, which is relatively safer than equity mutual funds. And periodically you can invest into like equity funds. So similarly, you have in your investments in fixed deposit, and because of lower returns you are planning to invest into mutual funds. So how can you plan this? Again, STP comes into play. You can initially put all your money into debt mutual funds or other safer funds, and then you can gradually shift part of your funds into equity mutual funds. So in this way you can plan your finances to get the best outcome of your investments. So now I'll get into SWP. SWP is mainly required for those individuals who are planning to withdraw income from your investments. So let's say you are a retired person, you have your retirement corpus ready, and now you just want to generate some income from your retirement corpus. So SWP is just the opposite of SIP, right? For SIP, you are making your investments every month, and at the end of the period, after 5 years or 10 years or longer term, you withdraw your funds. For SWP, this is just the opposite. Initially, you put all your money, and every month you are withdrawing a part of it. Let's say 1% of your corpus every month you are withdrawing, right? So in this way, retirement people who are retired or people who are looking for income generation, so SWP is for those people. Another way to invest in mutual funds, which is NFO, that is new fund offer, right? So similar to stocks which have IPO, initial public offering, for mutual funds it's NFO. So for NFOs, like there is a time period during which you can uh, invest into NFOs, and the pricing of which is at its face value, which is 10 rupees. The unit value is rupees 10. And currently there are a lot of NFOs which are going on. Now I'll give you a brief idea how you can invest in mutual funds, be it lump sum investment, be it SIP, STP, SWP, NFO, anything, how you can choose the platforms and everything. So there are two types of mutual funds here. One is direct mutual funds and another is regular mutual funds. Now what are these? See, direct mutual funds are those funds which you buy by yourself without getting any advisory services. You might choose, there are different companies in India through which you can invest in direct mutual funds. Let's say Zerodha is one platform, Grow is another platform, and there are other platforms as well. But here you can get good guidance in terms of execution. If you have any problems in terms of execution, they will definitely guide you. But in terms of advisory services, you will not get any service in kind of advisory, right? However, for regular mutual funds, you like there are few platforms through which you can invest in regular mutual funds, where you will get those advisory services based on your needs and requirements, right? So if you choose to invest in regular mutual funds through us, we will assist you and guide you so that your outcomes are met, your plans and goals are met. What are the differences between direct mutual funds and regular mutual funds? So the first difference is you get lower expense ratio or lower charges for direct mutual funds. However, for regular mutual funds, the charges or the expense ratio is higher, primarily because of the advisory service. Because I, as a mutual fund distributor, I am going to earn a fee on your investments, right? So based on the advisory service that I am going to provide you, I am going to receive that commission directly from the AMC, the asset management company. However, for direct mutual funds, you are saving your commission, but you're not going to receive any advisory services from the AMC or from the place from where you are purchasing the direct mutual fund. So now you might have questions like, you have purchased direct mutual funds. Are you eligible, or can you purchase regular mutual funds now? The answer is yes, you can. You are new to investments. Should you go for direct mutual funds or regular mutual funds? The answer is you can get into any kind of investments. It's completely up to you. But if you are looking for advisory services, if you are completely new, we always suggest to go with regular mutual funds so that we can help you and we can guide you with your mutual fund investments. And you might have a question like, you are already invested in direct mutual funds. Can you switch back to regular so that you can get advisory services? The answer is both yes and no. So, if your mutual fund investments are in demat, right, you it won't be possible to get into physical, to convert them to regular mutual funds. You can plan to sell your mutual fund investments from the current demat that you have purchased, and you can purchase fresh mutual funds through us in regular funds so that you can get the advisory services from us. Apart from these, you might have other questions, and also if you are having any doubts, if you have any questions regarding mutual funds, if you are looking for any kind of advisory services, you can reach out to us. You can visit our website and fill your contact details, and we will be happy to assist you. Thank you.